In this video, I want to address the critiques in the comments. I had been very bearish on Bitcoin and on crypto in general in the last month. Now in the last few days, we've seen a massive rally, and so did all my short positions on various altcoins get liquidated. Am I now in massive pain? I want to address a few misconceptions, and I want to share how I've actually gained despite being wrong in the last month. Now let's first recap why I was bearish on Bitcoin. What we've got over here is Bitcoin with its historically best moving average. Historically, if you backtest various moving averages, the 120-day simple moving average here in turquoise worked the best. As in, you buy in whenever the price is above and you sell or you bet on falling prices whenever the price is below the moving average. And what happened on the 18th of June is that we fell below that moving average, and so I turned bearish. Today hasn't yet closed, and so I haven't yet bought in. But in case we stay at our current price level of roughly 66,000, I will buy back in. So a classic situation of selling low and buying high. This is not how things should be, right? But here's the thing. In case we do close above today, I personally really didn't lose that much, right? Bitcoin only went up by 1.2% during that time. And historically, we actually see more bad trades than good trades. As in, we frequently buy in high to sell lower again. Or the same happened over here, right? We buy high, sell low again. So there are quite a lot of trades where we are buying not ideally. So most signals fail. However, the signals that do not fail, the signals that are correct in its prediction, they tend to be much larger in magnitude. And that's what makes this backtest profitable. In other words, yes, those are bad signals, but when we don't have bad signals, when we're actually catching on a trend, that's then when the real gains are made, right? This is then where we get 130% in profit, potentially with slight leverage, right? 1.3x, that's what I usually use. And that's the kind of times where we protect ourselves from a loss of 50%. And so yes, the videos in the last few days didn't age that well, especially given that we have rallied that much since the 7th of July. Now let's discuss the short positions. And let's talk about their development since the 7th of July, right? So the exact time when I had been dead wrong. Here's the first short position. So yes, I lost money on that short since opening. 6.4%. Here is the second short position that actually made some money, roughly 5%. And here's another short position, also made some money, roughly 1%. Now, why are 2 out of 3 short positions in profit while Bitcoin massively rallied? I believe it's 2 main reasons. It's not because I'm such a genius, it's actually the market structure. So here's the first interesting aspect about the altcoin market. Have a look at this. This is the performance of the top 100 altcoins in the last month. And yes, we do see 2 massive outliers over here, right? Mock and Popcat. But we're also seeing a lot of altcoins that are not in the green. Isn't that interesting? My observation is that returns get more and more concentrated in fewer and fewer altcoins. So the majority of altcoins actually does not perform well, but some altcoins do massive gains. What that means is when we can find a way to avoid those massive outliers, we should be good with shorting. So if we don't take an altcoin that everybody is talking about, like Mop or Popcat or MantraDAO, if we take something nobody's looking at, let's say Filecoin or HBAR or EOS or Ronin, right? The coins that nobody really has any interest in, then that's probably easier than trying to pick the few winners, right? The majority doesn't win like this. Now, the second important point is that most altcoins underperform Bitcoin. So it's not just a US dollar thing, it's actually a relative valuation play. So when you're shorting an altcoin, you can short this either versus the US dollar or versus any other token, right? Versus Ethereum or versus Bitcoin. And I personally like the latter more. I'm a fan of shorting altcoins relative to Bitcoin and Ethereum. And that's because of 2 reasons. First of all, the underperformance is more consistent. And secondly, the volatility is lower. And I like to have positions that have low volatility and high gains, right? You don't want the ups and downs, especially when you're shorting, especially when you're hoping for the price to decline, because you can't double down on the position. Let me show you what I mean. Over here, we've got the exact same asset. This is a different kind of chart for the same asset. asset. This is the asset measured in US dollars. This is the asset measured in Bitcoin. Now, what do we see here? We see that measured in US dollars, the volatility can be massive, right? The token can rise by more than 750% if you time it wrongly, right? If you bet on falling prices. However, the relative valuation play isn't that volatile, comparatively speaking, right? This rally was only quote unquote 150%, and the volatility tended to decline even more over time. And we just look at the last 2 years, roughly the maximum rally that we've seen temporarily here was 15% maybe. While when we look at the exact same chart in US dollars, we're seeing much larger rallies. Right? We're seeing 105% rallies. Again, this is the same asset. It's simply just here measured in Bitcoin and here measured in US dollars. And so when I talked about how I made money with this short, for example, this is a relative valuation short. So this lost against Bitcoin. It didn't lose in US dollars. And that's why I did not get burned that much, even though I was very wrong, at least in the last 10 days, when Bitcoin increased by more than 18%. And yes, I can understand how this message is not necessarily always properly conveyed in very short YouTube videos. That's why I make longer videos in premium. And yes, I can understand when people enter shorts relatively late and they don't exit early, but they rather exit after we've already fallen, that those kinds of rallies are painful. I understand this problem. That's why I make videos like this, right? It's way more important to simply be properly set up with your entire portfolio, to play relative valuation games, to also have a system of when to exit and when to enter and not just follow the gut feeling. It's also important to diversify across asset classes, right? To not just have Bitcoin, but to also have stocks, also have bonds, etc. The reason why we want to have all of those different kinds of assets is not just to reduce volatility, to reduce risk. The main reason is to also be flexible in case we do see a crash, right? To be able to buy a crash massively in case it happens. Now, what we've seen in the last month was not a crash, it was a correction that then fully recovered. But let's say that recovery wouldn't have happened. In that case, I would have sold some of my long-term government bonds, which I bought on the 25th of April. So those are now up by almost 11%, while at the same time, Bitcoin went up by 1%. So when you just look at those two parts of the portfolio, I have more flexibility and I even made more money. Because with Bitcoin, you only made 1%. With the long-term government bonds, you made more than 10%. And had we not recovered, had we continued to go further down and further down, then at some point I would have rebalanced the portfolio, because then the weighting of the long-term bonds relative to the Bitcoin, of course, is too high. You already know where I believe Bitcoin could go in the worst of cases. It could fall all the way down to 30K. If it doesn't happen though, it's also not a problem, right? I'm buying back in case we stay above the 120-day simple moving average. I haven't lost anything during this period of being wrong. It's all about managing the portfolio properly. It's betting on underperformance of the altcoins nobody is looking at, because again, most altcoins underperform Bitcoin most of the time. It's also buying stuff that's not just crypto, that in case things are shaking up, that we can properly take advantage of those opportunities. I've made several premium tutorial videos on the topic. For example, how to short altcoins with relative valuations, how to set up a portfolio, and what are the long-term expected returns and target allocations of a portfolio. Again, another tutorial on how to gain from relative valuations. And of course, the topic on target allocations is super important. So that's the video on fundamentals of portfolio allocation. If you've got only 1 or 2 months of your income in your investment portfolios, then of course those kind of topics aren't that important. Then you can simply just buy the dip with your income. If you have, however, 1 to 2 years of your income already saved up and you don't have proper risk management, then you won't be able to buy the dip whenever something dips at some point, right? Tech stocks might crash, Bitcoin might crash, we don't know. Nothing goes up forever. And being prepared accordingly to whatever happens, I believe, is the best long-term approach. So feel free to check out Premium. Feel free to also check our free Telegram. Link is as well down below. Looking very much forward to chatting with you. Cheers.